And this is Bloomberg Technology. Coming up in the next hour, Uber is said to be driving forward with a takeover of its Middle East rival Careem. We'll look at what that deal means for both ride-sharing giants. Plus, first production, now delivery seems to be a problem for Tesla. Elon Musk tweets an apology to a disgruntled customer who's waiting for her car. And it is Visa's 60th birthday. We'll talk to the company's CEO about staying competitive in an onslaught of disruption from new technology. First, to our top story. Uber is said to be in talks to buy its Dubai-based rival Careem in a deal which could value the Mideast competitor at more than $2 billion. Careem says it has more than 15 million users and almost 1 million drivers across 14 countries. It's not the first time the ride-hailing companies have considered a deal. Back in July, sources told Bloomberg the companies were talking about merging their Middle East operations. Joining us now, our Bloomberg tech reporter, Eric Newcomer, who of course covers Uber. So what do we know?
Well, we know Uber is sort of insistent on only growing at this point. For much of its history, it's sold its businesses in China and Southeast Asia to Grab. And so now India and the Middle East are two areas where Uber is competing fiercely. And so now there are talks about whether Uber could buy Careem, its main competitor in the Middle East.
Now talk to us about how this strategy differs with what they did in China and what they did in Southeast Asia, because it certainly shows what they've learned doesn't work.
Well, they took, sort of stakes in those companies, but had sort of super fierce competitors that were spending a ton of money and had a local advantage. I think in the Middle East and India, Uber has felt that it's better positioned. I think internally, Uber feels that it has more than half of the trips in the Middle East, so it just feels that it has a strong positioning, so it doesn't need to sort of yield to the local rival in the same way that it is done in other countries.
So this is an area, though, where they're in the midst of a rivalry with this particular company.
Careem, yep.
Careem is a competitor. Right. How bitter is that rivalry?
I think it's, fierce until it's not. I think founders like to run sort of their own country. This is, an important startup in the region. So to sell to Uber would certainly be sort of a bitter pill to swallow. But at the same time, Uber has this huge balance sheet that it's continuing to spend. At some point, you make the calculation, it's better to work with your enemy. You
mentioned India, where Uber's competing with Ola. Is this something that could happen there?
Could happen. I think nothing specific to report there, but there's no question that you have to believe it's a matter of price and sort of Ola's willingness to come to the table. But, Uber wants to sort of India and the Middle East continue to have sort of a major presence, and clearly sort of M&A is part of that strategy.
What has Uber CEO Dara Khosrowshahi said, the new CEO said, about his strategy for international expansion and how it might differ from the way Travis Kalanick approached it?
Well, it's certainly been one defined by cooperation. It's going to London and meeting with regulators there. It's also a matter of sort of more creative strategies, using Uber Eats to get a foothold in places where they might not otherwise be able to operate, sort of toying with sort of taxi-like businesses. It's this sort of creativity and openness to different regulated strategies to compete all over the world.
All right, Bloomberg Tech's Eric Newcomer. I know you'll continue to keep us posted, as you do. Well, it's one thing after another for Tesla. While production may have been a nightmare for the electric car maker, car delivery is now proving to be equally as difficult. In a tweet on Sunday, Musk apologized to a woman complaining about delivery delays and said, "Sorry, we've gone from production hell to delivery logistics hell, but this problem is far more tractable. We're making rapid progress, should be solved shortly." Now, even more uncertainty surrounds the company as Saudi Arabia's sovereign wealth fund invests $1 billion in rival Lucid Motors. This after Musk had cited the fund's interest in taking Tesla private. Here to talk about this more, who else but Bloomberg Businessweek's Max Chafkin. So Max, talk to us about how how significant these delivery issues are on top of the production issues.
I mean, it's not that surprising given that we know that Tesla has been in this mad scramble and that they were in all sorts of ways a little bit out of their depth. At the end of last quarter, there was this thing where they had made more cars than they delivered, and it appears now they're, really scrambling to get those cars out the door, and clearly they just, Elon Musk and his team just do not have the infrastructure quite yet to do this at the scale they'd hoped to do. So it's one of these things where it's not a huge, I would say it's not a huge problem. We saw, at various times the stock has been down and up earlier today, but I think it's one of those things you want to keep an eye on, because as Tesla tries to become, quote unquote, a real car company, as Elon Musk has put it, there are going to be all of these ways where they're going to be tested, and one of those is the kind of service, customer service, and just the ability to bring the cars to the customers.
Some other things the company is doing: limiting the number of paint colors you can get in your choice of car. Also, Elon tweeting a limited time offer to give new buyers free charging for life. I mean, are these good moves, or are they a sign of desperation?
I think probably the bulls will see it one way and the bears will see the other way. The color issue strikes me as, unless you really wanted one of those colors, probably good news for most Tesla supporters. I mean, in all sorts of ways, the company sort of bit off more than it could chew, and anything they can do to sort of limit that, I think, is a good thing. I looked at the this kind of limited time supercharger offer as a little bit of a red flag, because it starts to feel like, oh, you're pulling out all the stops. You're really doing everything you can to goose sales and to sell as many of these things this quarter, and you just wonder how many of those levers they'll have to pull, next quarter and the quarter after that and the one after that.
What's your take on this investment in Lucid by the Saudis, and what it means for their continued interest in Tesla? They do already have a 5% stake, but here you have them investing in a competitor formally.
I wouldn't read all that much into it. I mean, there are a lot of these companies that are trying to build luxury electric vehicles. In other words, competing head-to-head with Tesla. There's a Chinese company, NIO, that just went public. I think the real players here are the big automakers, BMW, Audi, et cetera. So that's where I would sort of think about the sort of competitive stuff. I do think this is it's just yet another way in which the drama of the previous month, where Musk claimed that he had secured funding from Saudi Arabia, doesn't look so good, because clearly they were talking to this competitor.
So, we should talk about this SpaceX event that's coming up tonight. Pretty big event for the company, and Elon has often used these opportunities to sort of prop up Tesla. What do we know that's going to be happening at this event tonight? What are you going to be listening for?
So we know that they're going to announce a private space traveler, and this has been promised for some time. And last week, possibly in an attempt to kind of change the narrative, Elon tweeted that they would be making this announcement. I think one thing that both companies have used to their advantage is that one company's accomplishments can sort of have a positive impact on the other one, because you see, oh, Elon Musk is capable of sending a private tourist to space. That makes Tesla investors feel more confident that he'll be able to get a mid-size, car out the door. So I think there's that. I mean, assuming it's a good show and everything, then that should be good for both companies. You never know. Elon Musk is a master of these kind of launch events, and you just wonder if there's some kind of trick that either Tesla or SpaceX has up its sleeve. So certainly be watching closely.
Got to ask you, Max, about this latest headline crossing about the Thai rescue diver, the one who's been leading that or led that operation, now suing Elon Musk for defamation. This is the same person that Musk called a pedo. He then apologized for that, but then elaborated on the comments in an email to BuzzFeed. How significant is this?
So the diver has already said he was planning on suing. I think the main thing here is that Elon, if you're friends with Elon Musk, you'd hope that somebody would grab the phone and not let him use it for the next, 24 to 48 hours, because this back and forth he's had with Mr. Unsworth has been just, incredibly distracting for his companies. So we'll see. I mean, in any other situation, this would be sort of a small-scale dispute between, two individuals, but he's over the past few months managed to turn these things into major, news cycles. So we'll see what happens.
All right, the cave explorer Vernon Unsworth looking for $76 million, according to these court filings. We'll continue to follow that. Bloomberg Business Week's Max Trafkin, as always, thanks for stopping by. Coming up, Visa shares up over 40% in the last year as the company faces an onslaught of new competitors thanks to new technology. We'll check in with Visa's CEO next. And if you like Bloomberg News, check us out on the radio. Listen on the Bloomberg app, Bloomberg.com, in the U.S. on SiriusXM. This is Bloomberg. Over the last 60 years, Visa has become the biggest payments network in the world, with 3.2 billion cards driving over $10 trillion in payments a year. Shares are up 40% over the last year. This as Visa fights a backlash against the so-called interchange fees retailers are charged every time a card is swiped, tapped, or inserted. Obviously, all of this is changing as new technology continues to disrupt. Here with me now, we've got Visa CEO Al Kelly. Al, thank you so much for joining us.
My pleasure, Emily.
Special day because you're celebrating Visa's 60th anniversary. You've been running the company for 2 years. You were on the board a couple of years before that, and you worked at Amex for many years.
All true.
So as the payments landscape shifts as a result of all of these tech disruptions, what is your vision for keeping Visa competitive?
Well, the exciting thing for us is that 60 years is just the beginning. I think the payment space is getting more and more exciting every day. Number one, we've got the ability to continue to displace cash and check, which is still $17 trillion spent last year on cash and check. The ability to open new segments. It's not just about consumers to go buying at businesses, but now governments are distributing funds to their citizens. We've got the B2B space, which is extremely exciting. In fact, the cash and check displacement opportunity there is larger than it is in the consumer space. We're working on having our network rails work in the other direction. So rather than just necessarily pulling funds when somebody buys goods and services, we're pushing monies to people's bank accounts and creating new use cases there. So, and we're continuing to partner with a lot of new exciting players that are coming into the space. So I think the future is bright, and I look at us as 60 years very, very young.
The payments business is really interesting because it involves a lot of frenemies. You have lots of partnerships with companies that you also compete with. So companies like PayPal and Square and Stripe. How do you plan to use technology to compete with technology?
Well, it is a community of lots of frenemies. The payments ecosystem is very interesting because it requires lots and lots of players to come together to actually make it work. And the people that look to cooperate and work together make all the difference in the world. You mentioned PayPal. I spent a couple hours on Friday with Dan Schulman. That we have a wonderful relationship with them where together we're trying to grow the payments ecosystem space, and we're working with lots and lots of other players to do just the same. My view at Visa is that we should be open to talk to anyone about anything, and we should assume everyone can be a friend until they prove otherwise. And I think that's the only way that you figure out how to move ahead is by making sure that you have wonderful engagement with as many people as you possibly can.
Okay, so on that note, we know that the online checkout experience has become a little bit cluttered. You see so many icons when you do that checkout. So Visa is partnering with MasterCard and Amex and Discover to come up with this unified button. What have you learned since you announced that decision?
Well, this is actually a standard coming out of something called EMVCo, which is the standard-setting body that all those companies and others participate in. I think we're all united in the fact that there's a NASCARization of the checkout experience. There's all these different labels. And the reality is that the e-commerce experience for shopping and buying still is lousy. Too many people shop and don't get to the point of actually buying. Consumers get confused when they get to the actual situation where they actually actually have to pay for whatever it is they bought. And this is lost volume to retailers, lost volume to networks, lost volume to banks. So we're simply trying to make the experience for the consumer that much better, which makes it better for everybody. And we're in lots of discussions in the standard setting group about making sure that the technology is ready, and we're excited about the prospect of having this start to come to market probably sometime in the early to middle part of 2019.
That said, there's still a war for dominance in online payments, whether that is PayPal or Amazon. You mentioned PayPal as a sort of frenemy. Do you think PayPal could be included in this unified button in the future?
Well, I think we're open to anybody being involved. We're open to anything that makes the payment ecosystem better as we look to advance. I think the reality is that PayPal's got started with being the kind of the button, if you will, in the e-commerce space, and whether they would really look to this second button, I don't know. You'd have to ask PayPal. But I think the reality is that our goal is to make the payment ecosystem as easy as it can possibly be for the people playing in it, but most importantly for the buying consumers around the world.
Does this button have a name, and how have retailers responded to it?
Well, its technical term is secure remote commerce, but that's a lousy term. We'll have to do a much better job marketing as we kind of think about what it actually is when we decide to come to market. So that's still a TBD. I think that we're still working in explaining to merchants how it works. I think most merchants actually want a better experience at the checkout, at the point of checkout. They want to make sure that their consumers are enabled to buy as much as possible, and that's everything from having a great website to great navigation to having a great checkout experience. So I think that as we learn and have more discussions with merchants, they'll understand our motivation is very simple. It's to make the experience for the user that much better when they go to check out and buying whatever good or service they're looking to buy.
Now, mobile payments have been fairly slow to take off in the United States. By Visa's own estimates, as I understand it, less than 0.5% of volume on your network comes from mobile. How quickly and how much do you see that actually growing?
Well, as you probably know, Emily, we're on a bit of a crusade around the world to promote contactless payments. And in many countries, they've started to really take off. One of the countries that's behind much of the rest of the world, particularly the developed world, is the United States. The reality is that the infrastructure is largely plumbed to be able to facilitate contactless payments. Many of the terminals are ready. Many of the largest merchants are ready. The reality is, though, there's this embedded set of cards. You mentioned the 3.3 billion Visa cards. Obviously, many of those are in the United States. And only fairly recently did the issuers start putting a chip on the card. So most issuers are committed that as we start to move towards replacing cards over time, that they'll embed the near field communication capability that enables contactless payments. And I think as contactless payments take off, the form factor of both the card and the mobile phone, where the tap experience is simply better, will both be aided by the reality of contactless taking off in the United States.
Will this further hinder the adoption, contactless cards, of Apple Pay, of Samsung Pay, which, Apple seemed to be the declared leader in contactless pay just 3 years ago?
I don't see that. I think that the reality is that their partners, as well as many other partners in the space, many of the Samsung phones, the Apple phones, have embedded in their wallets Visa cards. And to the degree that this helps facilitate mobile payments that have Visa cards stored in their wallets, that's perfectly good for us, and it's perfectly good for the ecosystem.
Now, Amazon has shown no lack of ambition into getting into new markets, and they are going to be a huge player in the payments space. What sort of threat are you preparing for from Amazon?
Well, Amazon's a wonderful partner of Visa's. We have a terrific relationship with them and have for some time. They're also very customer focused, and they want to have the customer use whatever product they're most comfortable with. I think it remains to be seen exactly what Amazon does in the payment space, and you'd have to ask them.
Couldn't they use their muscle to muscle you out of some fees?
The reality is that I think that they, again, want what's best for their customer, and if their customer wants to use Visa, wants to use the Visa cards issued by our banks around the world, they're customer-centric approach to business, I think, facilitates them wanting to make sure that they work with us and work with others to make sure that they offer the widest array of options to their customers so they don't turn away anybody. I think that that's central to their strategy.
You're working with car companies to load payments onto the dashboard. Can you give us any more specifics about what car companies you're working with or how you expect this all to evolve?
Well, thank you for the question. When I talked about some of the future being bright, I didn't talk about the Internet of Things, and I think connected offices, connected cars, connected homes are an incredible growth opportunity for us. We're the largest network in the world, as you said in your introductory comments. 46 million merchants around the world accept Visa cards, but we actually think that it should be 10 times that, and the Internet of Things is going to be one of those things that does it. We're talking to manufacturers in the automotive space as well as manufacturers of home appliances and office equipment. And our task at this point in time, Emily, is to make sure that we're creating an on-ramp for payments so that payment facilitation happens as these manufacturers build the next generation of cars and equipment and appliances, that payments are enabled so that when you're at your refrigerator and you realize that you're out of milk and butter, right there at your refrigerator, you can make a payment without having to go to your desk and jot down a note and then go buy later, either online or at the physical store. So we're not at this stage prepared to talk about who we're talking to, but I can tell you we're talking to a wide range of manufacturers around all of this connected space that transcends a consumer's life.
You've got a unique perspective on macroeconomic trends. As there's a lot of political uncertainty, the U.S. is in the midst of a trade war. Do you have any concern about how this affects your business?
Well, we expect growth this year to still globally be about 3.3%. As we look at around the world, and as we look at 19 and 20, we see it slowing a little bit, but still north of 3%. I think that when we look at the U.S., the impacts of tax reform have been a real positive. It's increased government spending. That helps. Certainly, trade wars, potentially some inflation could dampen some of the positive tailwinds that exist out there, and it's something that we're watching closely. But right now, as we look into the future, I think that the economic situation looks pretty bright as long as we don't run into any geopolitical risks, which is frankly one of the things that concerns me the most when I look ahead.
Quick last question. Blockchain, Bitcoin, is it a threat or an opportunity?
Opportunity. I think that it remains to be seen exactly what happens in cryptocurrencies and whether they really can move from being more of a commodity and get into payments. But I think the blockchain technology is something that we're looking closely at, as are we machine language and artificial intelligence. Just down the road in Palo Alto, we've got a Visa research center that's focused on all those things.
All right. Visa CEO Al Kelly, great to have you back here on Bloomberg. Thanks so much for joining us.
Thanks, Emily. Good to be with you.
All right, much more ahead. Remember, Bloomberg Tech live streaming on Twitter. You can check us out at Technology, and be sure to follow our global breaking news network, TikTok, on Twitter. This is Bloomberg. Coming up, 8 years ago, Google left China over security concerns. Now it is planning to go back. But one research scientist is quitting because of it. Will others follow? That is next. And later this hour, a venture capital fund with sights on automation here with a major announcement. Find out what it's all about. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. In early August, it was revealed that Google wants back into China. And according to reports, the search engine was willing to work with the Chinese government to censor search results. One of the very things that led Google to pack up and leave China 8 years earlier. Now, a Google research scientist has left the company in protest, saying, quote, "I have cherished working at Google and hold the vast majority of my colleagues in very high regard, both professionally and ethically, but I cannot work at a company that will not internally clarify its ethical red lines in areas that it is actively engaging." Those are the words of Jack Polson. He joins us now from Toronto. Jack, thank you so much for joining us. So walk us through your decision to resign rather than trying to protest from within.
Sure. So I, like most employees, found out about this through the Intercept reporting on August 1st. I'll say it was a very vocal 3 weeks following that. Within that week, I was trying to raise concerns internally. There was a lot of pushback and talking about it. It was phrased as a very exploratory project. Not many managers really knew anything about it. So as an employee, when you try and raise such a concern, you're essentially told, just wait for a company-wide discussion and then your concerns will eventually be handled. A few days of this, I submitted a conditional resignation saying if this turns out to be true, then I'm forced to resign for ethical reasons. Still, even after submitting that conditional resignation, still I essentially received no clarification on what red lines might be crossed. And then after enough time passed, say another week and a half, I submitted a formal resignation, wrote a 5-page, very well-cited document explaining my reasons, some of which you quoted at the very end, and then circulated that throughout the company.
Another part of that document, Jack, that you wrote, you say, I'm forced to resign in order to avoid contributing to or profiting from the erosion of protections for dissidents. There is an all too real possibility that other nations will attempt to leverage our actions in China in order to demand our compliance with their security demands. Meantime, what Google has said about all of this, they say we've been investing for many years to help Chinese users from developing Android through mobile apps like Google Translate and Files Go and our developers tools. But our work on search has been exploratory and we are not close to launching a search product in China. What are your real concerns about Google going back into China and potentially censoring results according to Chinese law?
Yeah, so I would defer to the Human Rights Coalition letter that was written on August 28th from 14 organizations, including Amnesty International, Electronic Frontiers Foundation, Human Rights Watch, Human Rights in China, the list goes on. They laid out their concerns pretty clearly. They can say it much more eloquently and with more authority than I can. So I would call on everyone to read that. And in particular, part of the reason I ended up resigning is before I left, that letter came out. And I tried to raise it as a point as to why the human rights concerns are an issue, and that letter was still not responded to either internally or publicly. Now, to your point about this only being exploratory, I think it's really important to call attention to the AI principles, which were laid out as a response to earlier internal organizing efforts, in particular surrounding Project Maven. So what's stated very explicitly in the AI principles is that Google commits to not design or deploy technologies whose purpose contravenes widely accepted international law or human rights concerns. Now, I'd say there's a lot of push for this to be seen as exploratory, but I don't think it's debatable that this at least passed the design phase. So I think that coupled with this human rights letter is a pretty clear crossing of the currently written down red lines. And so to quote a colleague, Meredith Whitaker, I don't think employees at tech companies should accept vague feel-good statements in exchange for meaningful accountability. So what I'm calling for right now is meaningful accountability. In particular, if we're stating we care about human rights, we need to respond to human rights organizations.
By our last count, more than 1,400 employees signed a letter demanding that Google appoint someone to assess the, quote, urgent moral and ethical issues raised by this particular plan. Do you have any new metrics about the scale of the frustration there? Any stories you can share about your colleagues and how they're feeling?
I don't want to speak too much for my colleagues, except to tell them that you're not alone. And if this is something that you have concerns with, there's a broad movement that you can join, including the Tech Workers Coalition and Tech Solidarity. Within Google, there was, as I stated earlier, very effective internal organizing surrounding Project Maven, and most recently with the Ethics Code Yellow Call, which was, for better or for worse, leaked to the New York Times with those 1,400 signatures.
Now, in the recent months, we've seen dissenters at Google protest the company's work with the Pentagon. Google, in that instance, decided to let its contract with the Pentagon lapse. There's also been dissent on both sides about how Google handles diversity, where you have diversity advocates within the company say the company is not doing enough, and others like James Damore who feel that they're being ostracized as a result of these efforts. Do you think Google cares about dissent?
I'd say that that's almost beside the point. What I really care about is accountability as opposed to what the care is or is not. And I think in this case, it's pretty clear that there hasn't been accountability so far, and that's part of why I'm resigning, is to call for accountability and a response to human rights organizations.
So what will you do otherwise, now that you've resigned?
I'll say that it's been pretty surprising exactly how positive the response has been. Within the last, 2-3 days, I've had 30 job offers, let's say, an endless stream of extremely positive, unsolicited emails, and I think I've received one hate mail and 100 positive messages at least. So I'm not worried at this point, to say the least. And I would encourage other employees thinking of speaking out to realize that this isn't as scary as it may sound.
Jack Paulson there, former Google research scientist from Toronto. Thanks so much for sharing your side of the story. Coming up, a VC fund is making waves with a $137 million announcement aimed at automation. Find out why. Plus, another tech exec follows Bezos' lead to journalism. What to expect from Time Magazine's new Silicon Valley owners. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang. Base 10 Partners just announced they've raised $137 million for its fund, focusing on what they call automation for the real world. The sum makes it the largest fund of its kind for a venture capital fund led by a black investor. The new fund will lead investments in early stage companies, mostly seed, Series A, with checks ranging from $500,000 to $5 million. Here to discuss Base 10's co-founder and managing partner, Ade Ajao. And Ade, you've been on the show before. You launched Workday Ventures.
Exactly.
And have spent the last 18 months or so putting this new fund together.
Correct.
Automation for the real world, what does that mean?
That means focusing on companies that are helping the largest sectors of the economy, like construction, real estate, or waste management, adapt to automation. The way we like to think about it is companies that are solving problems for the 99%, and that think more about the problem they are solving than about the technology first.
So what are 1% problems that you think too many investors are focused on?
We think that the next deep neural network is super exciting for the 1%, and particularly for those of us that are nerds, but it's unlikely to have an immediate effect in something like waste management. So we are actually focused on the other 99% that think of things like, where do you find a home? Or how do you get rid of your trash? Or like, how do you have better crops? And we think that there is not enough focus on Silicon Valley on those problems, and there was no fund that had an exclusive focus on that.
You've been raising money for the last 12 months. What was the reception like?
It was very good. So we are extremely happy and proud of the LPs that have supported us. I think that a lot of them describe our focus on real economy versus AI like a breath of fresh air in a world that is all the time talking about the machines are coming, are taking everyone's jobs, and we are actually like, no, automation could be a good thing if we invest in the kind of companies that believe that we should all benefit from it rather than 1%.
So, you make a point to point out that this is the first fund, largest fund of its kind led by a black investor. Why do you think that's important?
It's interesting. For me, it has been a journey realizing that that is important, because where I grew up, and I'm half Nigerian, half Spanish, because I grew up in southern Spain, I was the only black kid around. And that made me don't have a racial identity. What is interesting about the US, and I have found over the last decade, is that the US gives you a racial identity, whether you want it or not. And we are in a place where historically people have been treated differently because they look differently, and that has resulted in issues like the ones you have been talking about in lack of diversity in tech. I realized that put me in a unique position, and I realized that it's important to move that conversation forward.
So is it something that you now play up? So many women investors have told me, well, I don't want to be the woman investor. I just want to be a good investor.
Yeah. So here's an interesting thing. When we were fundraising, it was not until we had 95% of the fund completed, like about 120 million, that one investor told us, hey, have you thought about talking to investors that have a diversity focus? And we're like, oh yeah, I realized that might be a competitive advantage for us, but we didn't. And part of that is, because we're very prideful about the fact that, I'm black and I'm here and I'm investing in other people like me, but it doesn't need to be our main focus, because what we believe is that if you invest in people that are solving problems for the 99%, you're going to end up with a pretty diverse bunch, because those are the kind of folks that are actually going to internalize those problems and work on them.
Now, you have a fascinating background, because not only did you immigrate from Spain, but you founded a rival to Uber in Latin America called Cabify.
So I was a founding investor of Cabify. I did it with a couple of classmates of mine from Stanford. It's a fantastic company. Juan, my friend and CEO, is definitely giving Uber a run for its money in Latin America and Spain. And I think part of what has made Cabify very successful is the focus on regional communities, where the drivers have true pride of what Cabify does for the community, for the region, and for their families, and that deep understanding of the problem you are actually solving and the people you are serving has been a huge differentiator for the company over the last 7 years.
We've seen Uber sell its businesses in other global regions where it wasn't able to compete, whether it's China or Southeast Asia. We also just reported on a story about Uber in talks to buy its Middle East competitor, Careem. How do you expect Uber versus others' state of play to evolve in Latin America?
Yeah, I'm not in the day-to-day of Cabify, so that will be more for Juan to speculate. What I can say is that the numbers of the company and in general the excitement on the company just goes up month by month. So it is definitely a very important region, I think, for anyone, but Cabify feels very good of the position where it is.
All right. Base 10 co-founder and managing partner, Ade Ajao. Thank you so much.
Thank you very much, Emily.
Great to
pleasure.
have you. Coming up, Time's new tech owners. The legendary magazine is being sold to a Silicon Valley billionaire. That's next. This is Bloomberg. First, it was Jeff Bezos buying the Washington Post. Now, another tech billionaire is buying a journalistic institution. This time, Salesforce co-founder Mark Benioff and his wife, Lynn Benioff, buying Time magazine for $190 million. The Benioffs are unloading the fabled publication from Meredith Media in an all-cash deal. It's a personal purchase, meaning it is unrelated to Salesforce. So why are they doing this, and what does it mean for Time? To answer that, I want to bring in John Klein, chairman of TAP Media. Before that, he was president of CNN. And with me here in the studio, I have Bloomberg's Nico Grant, who covers Salesforce, and Mark Benioff. So, Nico, first of all, I was trading messages with Mark last night. He's very excited about this. Why is he doing this?
So,
why are they doing this, I should say, because Lynn is involved as well.
Yeah, and I think that's crucial. Mark Benioff has tried to pitch himself as a civic leader, and I think he really wants to be part of the conversation when it comes to criticism of President Trump and his policies, or when it comes to sharing his progressive values. He tends to be pretty outspoken. I think one of the tenets of that is he appreciates a free press. Right now, people on the left tend to lionize the press as an important check on power. And I think that when you see an institution like Time magazine, he thinks this is a perfect brand, this is a perfect opportunity to save a news outlet that has done really great work and give him an additional platform.
Here's a tweet from Mark Benioff. The power of time has always been in its unique storytelling of the people and issues that affect us all and connect us all. A treasure trove of our history and culture. We have deep respect for their organization and are honored to be stewards of this iconic brand. John, this as Jeff Bezos has bought the Washington Post. You've got Lorraine Powell Jobs and The Atlantic. As Nico said, Mark Benioff and many of these tech magnates not shy at all about their political views. What does that mean for the publication and for the media?
I don't know if this has much to do with politics other than there's been a huge Trump bump that the Washington Post has gotten from aggressively covering the goings-on in the administration, same with the New York Times, and Time Magazine has missed out on that almost completely because they haven't had the resources to do aggressive reporting and investigation, and this may give them a chance to get back in that game.
The relevance of the magazine, though, has shifted, John. How much do you believe that Time Magazine and the Time cover still matters?
The Time cover, interestingly enough, seems to have far more impact than the magazine itself. It's still got a lot of cultural currency. The president cares a lot about how many covers he's been on, but people talk about it a lot. And I think they could do a lot more with it and leverage that power. I think that this is really kind of a Moneyball play by Mark Benioff. That is, he understands the power of artificial intelligence really well. Salesforce has a very sophisticated in-house AI program. And I wouldn't be surprised that he's looking, if he were looking at Time Magazine as a very powerful brand that, given the proper dose of artificial intelligence, enabling it to really understand its consumers and find new audiences, could become even more valuable over that next 20 to 25 year period that the current editor, Ed Felsenthal, said Benioff has been encouraging them to think.
Nico, do you think the Benioffs will run this as a business or as a loss leader?
I think that the Benioffs are going to stay away from operational matters. They said they won't be making any editorial decisions. I think at the same time it's going to be important to them to make sure that Time has all the resources needed to go forward. They know that they don't have the expertise. They're still partnering with Meredith on making sure that distribution and advertising will go forward. But regardless of any of the details, how it plays out, this is really the debut of Mark Benioff in some ways on the national stage. Salesforce can be so inside baseball as an enterprise company. People around the country today are talking about Mark Benioff.
And he has, as you said, been not just pretty outspoken, but very outspoken about his politics, about things like equal pay. He's been very critical of Facebook, for example. John, if the Benioffs are saying they're not going to get involved in editorial decisions, do you think that's really possible in this day and age? That they and their politics and their personal views could have no impact on the publication?
I think it's possible and critically important for the credibility of the publication, and they probably know that better than anyone. We've got the example of Bezos with the Washington Post. There hasn't been any evidence of him tampering on the editorial side. I think there'd be a lot of noise, starting with the Time Magazine employees themselves, if there were any kind of attempted interference. He knows what he's bought. He's bought one of the beacons of independent journalism that has fallen on harder times lately, and if he really wants to revive it, he's going to just arm them with the tools they need. They can now afford to triple the size of their Washington reporting staff, for example, and they can know more about their audience than they've ever known before, so they can invest in technology in order to get there. If he's smart, that's what he's going to focus on and not worry about editorializing too much.
John, would you expect to see this when it comes to other publications? There certainly are other struggling publications with iconic brands out there. Fortune comes to mind. Will we see more of this?
I think we will, because I think it's very appealing on an emotional or personal level, but it also provides a legacy of sorts. When you've made a few $100 gazillion, you're probably sitting there thinking about what it's all going to add up to and what impact you might have. And especially for people who understand technology and its potential to take brands to the next level and beyond, it may become irresistible for them to adopt one of these struggling publications, and there are more to come. I mean, we see every day, these giants of publishing just looking to sell off individual titles. So I think there are sellers for sure in the marketplace, and I do think that there will be more buyers in the vein of Benioff.
Now, Bezos's purchase of the Washington Post, Nico, has not been without controversy from within and outside the organization as well. And the president has certainly trained his ire on the Washington Post and on Jeff Bezos. Could we see something similar happen here?
If it does happen, I don't think Mark Benioff would mind, given his criticism of President Trump and the fact that he hasn't been on the president's radar. But I think the big distinction that I see between those two is that Amazon permeates, every aspect of American life these days. And when it comes to Salesforce, it is a much smaller player, and he bought, a national news magazine rather than a tech magazine, for instance. But this is ultimately a prestige play for him. This is a man who just sponsored a new transit center in San Francisco to be named after his business. His company has the naming rights of the largest office tower that is west of the Mississippi. This is a man who really appreciates prestige and has a personal family history of these renowned folks crucial in the development of San Francisco.
John, quickly, you think we could see a similar pattern in TV?
Well, that would be interesting. Maybe broadcast TV, which is the area of the business that is struggling most, or some of these cable channels. I hear from well-to-do individuals all the time who are interested in buying a cable TV network, because that's a tougher business these days. But the Time magazine itself was a bit of a vanity play once it got going. Not at the beginning; it was a true startup back in the 1920s. But eventually, Henry Luce was using it as a vehicle to enhance his own reputation and to push his own politics. So the more independent-minded publication we know today is very different from the one that Luce ran when he was alive.
Right. All right, John Klein, CEO of TAP TV, former president of CNN. Thanks so much. Also, Bloomberg's Nico Grant. I know you'll continue to keep us posted on what happens here. And that does it for this edition of Bloomberg Technology. Be sure to tune in tomorrow. Alibaba Investor Day is underway with founder Jack Ma's recent announcement he'll be stepping down. We will have full coverage. I'm Emily Chang. This is Bloomberg.